It is the 6th of May at 10:46 in the morning. I fear that I'm still trying to focus on too much. I'm trying to focus on 6 markets, and I'm still not executing lots of trades that I could be doing that I see signals for, such as where to start? Euro to Japanese yen. I saw it here break support and didn't short it. But I didn't notice that this was a third contact on a trend line that started from the day before. I didn't look back a day. Then I shorted it here in the fourth contact to a trend line. It reversed a bit. I got stopped out by 20 points, and it dropped another 100 points, which would have been 4%, so I lost 2%. And these are trades I could have done. Gold, I saw it here on this resistance level, didn't short it. I was going to buy it here, but didn't. I was going to buy it here, but didn't. I was going to buy it here, but I didn't. But then, on the 1st of May, I understood that. This is the hour candlesticks. These are days, these vertical blue lines. That gold was on the top of its trend line, and my analysis it was look for a short opportunity. That was at 180. This is gold for the day. My trend lines didn't come through to my long-term screen. If I go to the hour, here's the parallel lines for the last 2 weeks. You can see how it's topping out that trend line that was support before it was acting as resistance. That was right here where it was resistance, and that's a 2-week trend line where it was previously support. And then another trend line didn't come through. If I go to days, the trend line that starts on the 25th of March that comes through the picture, well, that slices right through here on this day. And I didn't look back at the long-term trend line, and as you can see, my trend line, I printed this off on the 30th of April. This was the 5th of March. That was the low for the day. So, I should have been understanding that trend line. So that's gold. Missed opportunities there. Google. Well, I'm going to avoid Google, but I saw some opportunities to short it. These are 10-minute candlesticks. And this reversal pattern here was nice, but I didn't act on it because Google cost a lot to trade. The S&P had lots of ideas, but didn't act on them after that big sell-off. Saw the reversal. And the reverse head and shoulders. A real classic neckline and this diagonal line of support. I just chose not to, and it was 8 points down. It's just pure lack of courage. Crude in the morning, oh goodness. This is the third contact from a daily trend line from the day before, which I didn't look back at. Then it was chicken shit. I didn't sell it when it broke support. I watched it drop 300 points. I didn't buy it when it made a reversal, and a third contact to a trend line. And there was also a nice reversal pattern I didn't act on. So, bad day trading yesterday. Well, not really. I don't have regrets. And this morning, last night I didn't sleep with my neighbors who noise. I put in earplugs. So I put my alarm right by my head. I didn't wake up at 6 o'clock or 7 o'clock like my alarms were set for. I woke up at like 8:20. Crude. These are 1-minute candlesticks. You can see right here that's 7:10. There's a downtrend line. If we go forward, well, you can see that was 7:10 when we zoomed in, and it dropped 100 points. And I didn't wake up till like 8:20. That's kind of like a slanted reverse head and shoulders. I was in my bed with my notebook, didn't buy it at the neckline. And then this is Euro Yen, which I missed because I slept in because of my earplugs and my alarm not working. And you can see a nice break of support and a nice kind of reversal. And yeah, I did see at like 8:30 in my bed, I did see some opportunities, a double bottom on SPX. I didn't buy it at the 20-day moving average that acted as support. And then gold, well, it was a bit, I don't know what's wrong with gold in my head. I just didn't feel like buying something for the sake of buying something. But around 8:30, I saw it kind of trending up a little bit, and just it was not in the overbought, oversold territory, so I didn't act on it. So now I've got to sit here all day and wait for a high probability low risk setup, having missed a bunch of nice opportunities this morning that I could have acted on. In the past, with my demo trading, I have sold the break of support multiple times. I've covered it at a new support at the bottom. I've opened new long positions and sold them on the recovery. And so I've done that demo trading, so I am capable of trading something like that on my real account. And just trading 1, 2, 3 positions at 2% each will put my account right. My account is down exactly 8.9%, and 2% drawdown yesterday. But yesterday I wasn't discouraged and I wasn't having regret for all those missed opportunities. This morning, you know, I don't really care that I didn't wake up in time to see some market opportunities, because the market's always there. There's no direction in the market. So I think I have good mental strength to not be annoyed by these pseudo disappointments, and to not get what some people call get even-itis, where I want to overtrade and hit something with a big position. So I'm trading down from 2% to 1% positions with wider stops, because I shouldn't have been stopped out of that position yesterday. I should have been more careful on that euro to the yen position. It would have been nice to make £400 yesterday instead of losing £200. That's a would have. I'm taking would have out of my vocabulary. It's I can. So yes, I'm feeling a bit weak, a bit lacking a bit with self-doubt, and feeling a lack of courage. But I still believe, and I'm still disciplined, and this is how trading is. It's just mental anguish sometimes. And I believe that my anguish is about a 1 out of 10 right now. That pretty much sums up how I feel for the 6th of March. Everything trades the same way. We're just trading numbers based on mob psychology. That's all it is. It's nothing really tangible, really.